So the Fed decision looming, a slew of mega cap results to come. What's today's strength tell you, Tim?
It tells me that we have a green light to at least the best month of the year from the Fed's perspective. From the earnings season's perspective, folks following at home, I mean, we talk about this every night. It's been a very solid earnings season, and we have next week is kind of the week, and then a couple after that. But, we're 10.2% EPS growth, which is better than expected coming in. So when you combine that with the rest of the macro that we do get, that's either not really the usual data we're getting from the government, but I think you have a great backdrop of you're hearing from companies how resilient their earnings profile is. You are hearing from the top down that most people don't even really know what owner's equivalent rent is. All you need to know is that this is the best sign we've seen in owner's equivalent rent for an overall CPI number in months. So it was a relief, especially when so much focus was on the CPI, given it is the only data point seemingly that the Fed has that's somewhat coincident, although it's backward looking. So, look, I think this is a great backdrop. I think we've had some of the froth taking out of markets. I think there's a lot of skepticism out there. And in some sense, I really still think the pain trade is higher.
Yeah, Karen, the setup, though, starting off, at record highs going into earnings season is not necessarily ideal in terms of price action.
Right. No, I always say I like to much rather go in with the stock being down, like I would like to see the banks were down, thankfully going in. I think that, as Tim said, earnings season off to a really nice start, starting with the banks, not just for their own business, but also what they're seeing in the rest of the economy and the activity that they're seeing on the deal front. So sort of animal spirits are out there. We haven't seen the AI. We haven't seen AI earnings yet, though, and that obviously is a tremendous driver. And so we'll get a lot more information next week. But I don't know. I feel like this was a little frothy off of one piece of data that seemed good, a little bit cool, which is good. But if you step back a little, you don't need to step back very far and say, well, the Fed is still far from where they want to be on the inflation front. But as each month goes by, we get closer to a Fed that will be dovish no matter what.
Yeah, and I think what you're seeing today is people are kind of sighing relief and realizing, okay, the Fed is very likely going to be cutting rates, because with the inflation report, it's really not going to hinder them from doing so. And I think that's what people weren't convinced of, especially as we're getting no government data right now. So we did actually get this piece of CPI data. The question is, are we going to get that next month? Because they had already collected this data. They just couldn't report on it, which is why this could come out. They just aren't collecting the data right now for next month. So at this point, it's that much more important that we listen to everything that these earnings reports are saying. And what they're saying, they see in the health of the consumer and the economy. And so that's where I think the banks have been really important. Next week, we have Visa, MasterCard. But as much as the AI is the story, I do want to hear how is the overall consumer doing. And I think we're going to continue to hear that.
I mean, my opinion is there's no room for error, right? The market's full. So not the greatest setup going into the big five reporting. There is some statistics around, and you can look at this, where with the big five all report in the same week, it's not been a positive week. Doesn't mean it's a down or a crash, but a lot is already expected. And so my hunch is we gapped up today. I would fade it into next week.
Is there anything to, this observation that there does seem to be still intact a buy the dip mentality, that every dip that we faced, we've gone higher. People are still willing to get in to the markets. And does that make this rally more durable in your view?
I think it absolutely does. And I do think, while we've had guests come on and say that they think money markets are actually seeing inflows, and maybe that's a better place to be. And that's, by the way, that makes a lot of sense if you're worried about where markets sit here. I can't argue with that. But there's certainly an argument, as we saw the 10-year make a decided move below 4% today, that investors who are in the bond market and in money markets are looking at that cash and saying, it's not earning me as much as it used to, and I feel like I'm missing something. So I think you have a backdrop also where, again, we had a services PMI, it's a flash PMI, but it does give you some sense that the biggest part of our economy was actually better than expected. And I throw in that Michigan consumer estimate that was worse than expected, which, those are the two things you'd want if you're playing purely on macro here and a CPI today. So Carter's right. I mean, it's hard to feel as if everybody doesn't think Meta's going to save the day, right? This is, every quarter, Meta's extraordinary. Their top line, so in other words, they live up to that peg, that price to earnings growth ratio, and they continue to deliver on that. But I look at semiconductors making an all-time high today and a new relative high, and they're now up close to 40% this year with the NASDAQ only 18. We know what roughly percent of the overall market they are, and they're driving things. And I guess we've seen the volatility inherent in that sector, but I don't know why investors aren't chasing more of this.